liquidity is still tight. And because we're the furthest out on the risk curve, we suffer when there's no liquidity. But next year, they've made changes, things like the ESLR, the supplementary leverage ratio, which is to allow the banks to take more risk and absorb more treasuries. That is liquidity. So the treasury can print the bonds, the banks buy them, they turn it into magic bank money.
Money creation.
It's money creation, and that's liquidity.
Hello everyone, this is BTC Insight, and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
We have to start with the weirdness happening right now in December. If you feel like the system is gasping for air, you're right. Liquidity is still incredibly tight. We saw the Fed do more than the market expected recently, and that wasn't because they were feeling generous. It was because they had to. There are dead bodies potentially lurking from the October volatility that we haven't seen yet. The Fed knows that to get the banks through year-end funding, they are likely going to need another term repo measure. Why does this matter to you? Because crypto is the furthest asset out on the risk curve. When liquidity is sucked out of the system, like the $15 billion in bills the Treasury is dumping into the market on December 15th, crypto suffers first.
There's something weird still going on with liquidity. Outside of, are there any dead bodies from October? We don't know. But liquidity, we've got to get through year-end funding. There's not enough liquidity still in the system, which is why the Fed actually did more than expected, because they know. I still think they're going to have to do another measure in the term repo just to get the banks through their year-end funding. So liquidity is still tight. And because we're the furthest out on the risk curve, we suffer when there's no liquidity. But next year, they've made changes, things like the ESLR, the supplementary leverage ratio, which is to allow the banks to take more risk and absorb more treasuries. That is liquidity. So the treasury can print the bonds, the banks buy them, they turn it into magic bank money.
Money creation.
It's money creation, and that's liquidity. So it's all to come, but we're still in this weird patch, this December patch, where the Fed have got, the Treasury have got, on December 15th, a whole bunch of bills to sell. That's going to suck money out of the system. There's not enough money for year-end funding, so it's still a bit wobbly.
So how do you see the roadmap into 2026?
I can't see it any other way than we've got to roll $10 trillion of debt. The only way of doing it is by printing money. They've made the regulatory change to force the banks to do it, which we knew was going to come, because that's the next buyer. They're already using the balance sheet. We've got the big beautiful bill, which is a hugely stimulative tax cut that's there to juice the economy into the midterm elections. We've got Scott Bessent and Donald Trump saying we're going to have a really strong economy, because basically they're going to pump liquidity, fiscal stimulus, regulatory clarity. They're already saying crypto is one of the key industries that we want. And so I can only see with that the number has to go up.
Do you see a world with stimulus checks next year? I know that Trump and Bessent have spoken about it. Do you think it's coming?
They will buy anything to get through this midterm. It is the most important game, because don't forget, this government is backed by the technologists, and they've said they need rates to go lower. And that's for two reasons. One, they want mortgages down, but the other reason is interest payments on the debt need to be at the same as GDP. I've talked about this a lot in the Everything Code. And GDP growth, let's say in 2026, maybe 3.5% or 3% or 2.5%, a trend rate of growth, take an average over time, and interest rates are too high still. So they have to jam interest rates lower, stimulate the housing market, then push liquidity into the system, which stimulates all of the markets, then chuck in tax stimulus.
So
how can that not be good? But crypto gets it the most.
The ISM has been below 50 for 4 years now.
It's insane.
And it's the first time that it didn't line up with a 4-year cycle.
Yeah.
So I believe that it's the ISM cycle we should be following, not the 4-year cycle.
Which is based on the debt cycle, and that debt cycle got extended to 5.5 years or 5.4 years. So that's pushed it out, which gives us a cycle through to the end of 2026.
I hear you. It's been a difficult year. I think expectation and anticipation was too high for the year. It was a little bit like the Shawshank Redemption. If you remember the book, we had a jailbreak in 2024. We were getting our heads stuffed in a toilet by Elizabeth Warren and Gary Gensler. And whatever my issues are with President Trump, I applaud him for his political instincts and understanding how important the blockchain, crypto technology, Solana, Bitcoin, et cetera, are for the future of finance and for the future of America in order to maintain its mantle of financial services leadership. So we had a jailbreak, an explosion in prices, people levered up, expecting lots of regulatory bills getting passed this year. I mean, we got one of them passed, but the big one, the market structure one, which I think is the most detailed, didn't get passed this year.
I think it'll be 2026.
I think it will be.
How do you see 2026?
So that's the thing. I like 2026 as the expectations are super low. If you look at the fear-greed index, everybody's toggled on fear. If you go to the beginning of the year or the end of last year, everybody was toggled on greed. And so people are blown out of their positions, they've de-levered. We've got some healing to happen in the industry right now. But you know it and I know it, there's lots of underlying demand in these ETFs, lots of net buying. And so I like it, but listen, you know Bitcoin better than me, you know crypto better than me. It's a jagged edge. It looks like a very bad EKG, but it does move up and to the right.
Over the next 10 to 15 years, that the role of these economic operating systems is going to expand dramatically. And we're going to see, through the combination of AI and these economic OSs, we're going to see more and more parts of the entire economic system, not just stable coins and payments, but the establishment of the mechanisms of how we run a corporation, how contracts between entities work, how contracts are executed by AI, how governance happens in the world. We also believe that a distributed network model where you have active participation from major governments and infrastructure operators who have a stake in a network and participate in the governance of a network that can wire together economic systems around the world, whatever the political or economic bent of those is.
Am I right in saying that it's the framework, the legal framework for most real world assets right now?
Yeah.
Because as far as I know, there's no real other regulated real world asset framework other than the one that you guys pioneered.
We believe that assets will exist and need to proliferate and work across many networks. Whether it's a tokenized fund or tokenized real estate or a credit contract or other things to do that. And so we want to be a liquidity and distribution hub for those things.
So 2025, would you say it was a good year, a disappointing year? And then the next question is, how do you see 2026?
2025 was a fantastic year. Compare where we were a year ago to where we are today. We have almost every major institution in the world looking at this. We have the regulators in markets around the world basically rolling back and embracing in different ways. We have a race around the world to enable this. And so this is phenomenal. And technology progress has been incredible, whether you're in the Solana ecosystem, the EVM ecosystem, other platforms, privacy technology, so many things, Hyperliquid, like just incredible progress this year. So I'm more optimistic than I've ever been, way more optimistic than I've ever been. 2026 should be a phenomenal year for quality of execution, new products, new experiences. If you just focus on the price of crypto assets, you're missing the picture.
We've all been conditioned to believe in the 4-year Bitcoin halving cycle, but I think that's an oversimplification. I believe we should be following the ISM, Institute for Supply Management cycle, which is tethered to the debt refinancing cycle. For the first time in history, the ISM has been below 50 for nearly 4 years. The cycle has been extended. We are looking at a debt cycle that is stretched to roughly 5.4 years. This shift has pushed the peak of our current cycle out into the end of 2026.
I think right after the election, the kind of risk discount closed. Okay, so that was the bump from, where were we, 50 to 90, whatever that was.
50 and 90,
yeah, right. So that's what I call the kind of, Kamala wins, risk, crypto dies, discounted price. That discount closed, and Bitcoin found its level.
So we're at the cusp of 2026. How do you see the market playing out in 2026?
Yeah. QE is going to start presently. Powell has basically said, he said yesterday, call it whatever you want. He said, I'm going to start buying 40 billion a month in treasuries. I think they're going to do more, right? I think unemployment is going to tick up. I think they're causing stagflation. It's part of the hangover from the Biden, money printing. There's nothing they can do about it now. But with, $1 trillion in interest payments, there's really nothing they can do to stop the train, as we say, right? So you're going to see quantitative easing, reset of debt. You're still going to see higher rates than what they want, but they're going to be flooding the system with money. I think Trump is going to do stimulus checks before the midterms. He's going to take this tariff money.
I also think so.
Yeah, I think is a horrible idea. And there's no way that's not going to make its way into risk on assets, right? And so it may not be the COVID boom, but I just don't see how we don't see significantly higher prices next year.
What about this theory that there's the old cohort of Bitcoiners that are starting to offload their coins because Bitcoin went over $100,000? Do you think that's what's keeping the price down? Because even ETH is actually starting to outperform Bitcoin now.
Yeah, I think there was an equilibrium, which I thought was really interesting in the fall, between people who were churning out of Bitcoin or taking some profits from 6, 7, 8 years ago, and new money coming in. That's why the price didn't come down to 70, 60,000. And also there was a little bit of leverage in the system, which had to make its way out while the maxis were selling a little bit. And so I think they found an equilibrium in that 95K range, which I thought was pretty bullish.
Now listen, I'm speaking to you now before you're going up on stage tomorrow. Quick taster before you go up on stage. What can we expect?
Well, we are going to be announcing our foray into real world assets. I won't give it all away, but it's super cool. It's something that it's been a pet project of mine for over a year. Something we're spinning out of Abra, actually. And we are, I'll say, wink, wink to the audience, we are very strongly considering a public listing in Q1 of next year. And so that's now acting as rocket fuel for our business.
00 is, at its core, a physical fiber infrastructure network optimized for blockchain and other types of high-performance systems. We have multiple contributors that are either contributing fiber that they own, they lease, they have some sort of access to already, and they're using that to build this new parallel internet that runs alongside the public internet, but much faster.
Why do we need it?
The thing the internet was built for was not performance. It was built for reachability, and it does an incredible job of that. And blockchain's kind of matured to the place where we're competing with traditional markets. We're competing with NASDAQ and NYSE, and we're bringing equities on chain, we're tokenizing a bunch of stuff. And so we need to upgrade that base layer physical infrastructure to compete.
Is the project ready now? Do we have a second decentralized, very fast internet?
We do, yeah. We launched the mainnet on October 2nd, and since then we've got about 40% of Solana running on it by stake, 50% by validator count. Wow. So we've had a pretty fast adoption.
But how much are people actually profiting from the speed of this decentralized fiber network?
Yeah, so we just started onboarding the RPC providers, basically the transaction senders.
Yes.
And so for them, they're seeing a little bit of increased profitability for this, but really it's not necessarily about the interblock trading as much. There's a portion of that that's definitely about profitability. It's about the ability to go from 10,000 transactions per second to 500,000. And so more base fees, it's sort of like you can either sell one contract to a company for $20 million, or you can be Slack and you can sell everyone a $7 a month subscription.
We need to stop thinking about Bitcoin and Solana as just coins. They are economic operating systems, OS. Over the next 10 to 15 years, the combination of AI and these blockchain-based OSs will rewrite how the world functions. We aren't just talking about stablecoins and payments anymore. We are talking about the very mechanisms of governance, how corporations are run, how contracts are executed by AI agents, and how global economic systems are wired together.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.